Hello, um, welcome to another ES Futures Trading stream. I'm a little bit late here. It is 8:55 a.m. It's the last day of March. It is the last day of March. We just have CPE report, which gave us a spike to the upside. The market has a spike to the upside. It has a gap to the upside, and all of the overnight inventory here is long, all of it. Now you can see settle. You can see settle down here. Now then all the selling coming from. Oh. Now this market was bought just from the overnight low here. Notice how this market is being traded by very short-term traders here. It was sold, it was sold at one moment. I was sold from hard back here, and the market just came back to take that high out. Now this will in hindsight it's easy to say, right? This market was sold by short-term traders, short-term trading here, very short-term money here. The market just came back and took this high out. It gave us a weak low. Notice how exactly it comes from yesterday high. I make a mistake yesterday. I thought this gap was filled, but I failed to see this arrow here. The gap is not filled. Maybe because I have my charts in 2 ticks. I had my charts in 2 ticks. I couldn't see it. I missed this completely. I thought the market was going to have some kind of spike towards this POC from the previous overnight session. I took a loss here, actually, very ridiculous loss here, very full on my side, because I could have hedged here. I was well into the money, but I didn't hedge here because because I still had a lot of linear. My puts were up here 47 in the morning. I didn't hedge because I was trying to hedge somewhere in here, or at least close to this. But this was actually this was a good buying level here. Some fast thinking, fast trade here towards this hardback. Now we have the market has this weak low. I'm going to carry this information here. Weak low here, another. Notice how this was bought, and throughout the day we had the market. Oh, sorry, yesterday had some high volume at the 4080, 47, 50 feet here, which is the same as 4080. I'm going ahead and naming just 48. There is a very significant volume here at the 48. So higher volume, higher prices are attracting this. And the thing is, this kind of money here, I don't think this is. Actually, this is not. These are not short-term money here. It's maybe daily time frame here. Going on here. I need to add this number here. I need to add these ones here, and notice also how the market was bought here. And this kind of buying here really, really uh, put pressure on this on this level here, on this low. Look how this level has no the 4070 down here. No, but let me. Notice how this level here has no axis. How this profile here, I mean, this histogram here has no axis, no taper here, no taper here. So there's a lot of volume actually here. And I don't like this way, the way how this low doesn't have any, don't have taper here as well. A nice example of taper would be this, for example. This one here, this one here. No, this one is not. No, this one has a good axis. No, this, wow, this was terrible day. Wow, look at that. Look at this day, man. This is terrible day. This is horrendous day here. I have another level here. No, non-axis here. Then the gap. Another non-axis here. Another non-axis here. What else do I have here? I still, I guess I paid too much damage. This is what long gone now. Doesn't matter now. Alright. Let me go ahead and save this compiler. Okay. Let's make a review. I didn't write too much on my homework yesterday because that's I am repeating. You know, the market has gone nowhere. This is 1 year. Is this going to be tomorrow? Is going to be 1 year that the market has done nothing. 1, 2, 3, 6, 9, 11. Today is the last day of this month. The bodies are the high here. You know, it has everything. You have a range, market trading in a range, breakout failure. Now trying to start one time frame lower here, trying to start a trend to the downside. The breakout failure targets this low, the 3704 here, but this month is very close to the high, to its own high. So there is no excess here at the highs. When market has no excess here, the odds are that the market is coming back to repair this high. It remains to be seen if today the market can have a spike here, a rally here, and close and give us some excess on the other side. This market can come all the way up to here, for example, here, and still be to the downside in the very short term. We will have 2 months to the downside. This will still be the ultimate destination of a downside trend here. Now you gotta check look what's happening in the weekly. Remember, the weekly time frame, it develops week by week, right? It doesn't develop. It is a little bit shorter than the month, but bigger than the daily. Now you can see there, you can see the 2 ranges. We can see 2 ranges here. This market is breaking out to the upside of the lower range. You can see the 6-week range there, right? Yesterday also I draw. You can see that trend line to the downside. Right? It's having a breakout outside of that range of this trend line here. I guess we noticed this like 2-3 days ago when the market was below, was somewhere down here. But the most, not that I trade this one, the most important thing to me is the breakout of the range. We have 1, 2 weeks here, 3 including this one, and this market is having breakout outside this range. The half back here of this range, the center of this range, 40.32, 41.32, somewhere in here. And I will watch that 41.32, what happens around that level. We are having, the market is having an upside, and actually, if I use this chart, the market is having an upside breakout and has come back inside range. If this market opens right where it is now, 4090 will be up here, having an upside breakout. That's more relevant to me. Now the trade, the opportunity here is, if the market has a breakout, go with the breakout. If the breakout fails, fade the break. If the breakout fails, the destination becomes the opposite side of the range. In this case, it's going to be 38.50 or 38.40. Remember, the destination, the ultimate destination on the monthly is 37.04. If this breakout fails, the destination is the opposite side of the range. Continuation, we target the upper side. We target 4200 daily. Now the daily is kind of, when I see the daily, I saw a lot of weakness here. Buying coming from 200, 100, exactly. The last time was bought was exactly from the 50 SMA here to the tick. To the tick on the 50. Okay, but the pressure is to the upside, man. The market is has taken this high out, Next thing is the gap, and we see here, remember when we were looking at the monthly or the weekly range, that center is 41.32 right here. I mark this just as a reference of this range, because the weekly seems to be the cleanest time frame. But you start to see, when I see this in the lower side, this usually also, I mean, not usual, right? But these programs, these algos, when these companies with big companies, big cash funds, big money, decide to go long, trading money, no investment, trading money, decide to go pick a direction, they usually use this. They can use these references. The week, the 100 and the 200, either to go short or to go long around this. You can see the breakout of this was unfair, breakout unfair, and now exactly from this level. I see a lot of weakness in this one rather than this one and this one. There could be very short. This could be bigger trading money here and really short-term trading money here. Very short relative to this one and this one. These are algos, computer programs they could use, But remember, somebody programmed, somebody write a code, to buy around these things. They don't think by themselves. Somebody decide to go long around these levels or these ones, and they just use those software, so those programs to buy here. It is these bigger companies use that because there's no motions on that, right? For human buying here could be very emotional because the market will be trading back and forth around these levels. When you get rid of the human and just set the program here, the market will start buying here. It happens once, it happens twice, and the third time, notice how exactly was bought from the 50, right there. And this is the adjusted contract. The current contract is yesterday. Yesterday's. Did I am seeing it right? It that yesterday has this low exactly. My God, to the tick. Can you see? To the tick. So this is extremely weak here. This low from yesterday. And the non-adjusted contract we have the the previous day, not yesterday, but not Thursday, but also Wednesday to a tick here, right? Remember the most traded, most short-term traders, but very short-term traders, or what you call retail, they use this chart here. This chart, this adjusted chart. They don't bother and they don't know about this one. You know, what is the difference with this one? The difference is I started traded. Basically, this one has started traded in big volume around around the 10th here. From here behind, you got maybe, you know, in these days you have 1,500, 300, 250, 10, something like that, 10 contracts. Not that much actually. You can see it here, for example, right? I'm showing you. You check the data from CME, you have this contract. You know, here, for example, this would be December, this would be September, around, let's check September. That's 1, 2, 3 contracts back. That would be if if it is now, the current contract is June, so the next will be March 24. Look at the amount of volume that you have here. Really low, right? 58. And then it starts with December. We start, my bad, this is it. You know, 5 contracts for the March contract. You know, 3 contracts ahead of the current, of the one that we are trading now. And now, the next one, September contract, is 1,000. Can you see how, you know, that's why we have this really, you know, only one trade here, one trade here, you know, something like that. The next contract, 1,000 contracts traded. The next contract, which one would it be? I guess the next contract is Z. It is Z. I don't know which one it is. You know, this is the next contract, for example, right? Alright, let's go back to what we're talking, where we were in the daily, the weakness, but it doesn't mean the market is going to come back to repair those levels today, you know, because the pressure, you know, what I'm trying to do is trying to identify which direction the market is pressuring to. Now it seems that the market, you can see market is aiming to take these highs here, right? And we are, the market is breaking a weekly range, also taking out the high, the monthly high now. Upside continuation will close the gap and target and target this high here. But first, before going over there, you got these ones. You got the center. More likely to find some selling around this level here. Sideways trading, rejection, I don't know. Now, to monitor the market, oh my God, look at the gold here. We were talking about this gold for a while, how this was likely to come back to check to check this high. Once the market makes a high around these levels, I mean in the overnight, it's very rare, very seldom the market leaves that high up there. Usually comes back and take that one out. It is having an this gold market is having an upside extension. I guess the market is also, I don't trade based it in other markets, but this is something that I'm watching now. Also, notice how the bond market is very weak as well. The 30 years has three low here, 1, 2, 3. The same way how the ES has three highs. Remember we saw this. Oh man, what the heck is this? Remember we saw this three highs here in the weekly. These three highs here. This is actually a very weak level up here. Same goes with other markets as well. In this case, the bond market, this lows. This is not a good place for me to take a long here. The risk is high, extremely high, to be long in this market. This is the 10, this is the 30, and now the market, the gold is about to take very close to take this high. I've seen this one, and seldom a market when the market makes a high, makes a new high. It is one only. Usually it's, there's new high after new high after new high after new high. You have seen that the last couple of years with the ES, Nasdaq, bond markets. When this bond market make a new low, it's seldom. It's only one. Is this keeps going another one, multiple lows, right? 5, 10, 15 lows before they start before the trend. So this is only one. This is only one. 1 year ago. It is 1 year ago. Yes, it is 1 year ago. It's right there. Okay, so it's right there. About to make a new high. This is a new high, right? But this was made in the overnight. It still hasn't taken this high. Or it does. Yeah, it has made a new high. The bond, the gold. All right. This is just not trade in a vacuum. I try to monitor those ones. And now the volatility, which is supposed to be an index, a way to measure risk, is again below 19. Okay. I see tremendous amount of risk here in this market because we have seen, right? We have seen these levels, these lows here, exactly the 50 SMA, which is also yesterday's high. Non-excess here in this low, which was 50, which is the non-adjusted 50 SMA. Big gap here. Gaps are excess, former excess. Poor low here. But the current business. Remember, we were talking also a lot about these highs here. The lack of excess of these highs here. No excess. Poor high. 1, 2, 3 poor highs. And what is this 4132? 4132 is right. Oh my God! This is right at the close of the gap. Is it? That's the center of the range, right? We were talking about 4132. Was the center of this range? Of this range here, the center is 4132. It's right about the half. Oh my God! Oh, right about center of the gap. Gosh. The market coming all the way up to here will take care of these two highs. It will leave this one, but two will be out. Another weekly, monthly. monthly high. Actually, this is the non-adjusted. This is the weekly high. This is the real one. No, I mean, this is the new one, right? What I see here, because that's what this is what we trade. This is what I trade is the new contract. I don't trade an adjusted contract. I trade the one that expires on June. The next thing, what else can be seen here? We talk about how this trade is being conducted by very short-term traders. You know, the market selling from high back and coming back to check that high. That's short-term money, very short-term money here. Now, it is going to come back to repair this low. It didn't down here. It didn't here. The same way how we have this low here, it is down here as well. I'm carrying on that information. This day is cleaner. This day is cleaner. Okay, but you can see the money. What the market is. I don't see. I call that this market is in short covering mode. But short covering meaning the removal of the short inventory from this range, for example, right? But it is not trading in short covering, in the classical short covering way, which is you got a market that has these sudden spikes or bursts to the upside. You know, it's trading kind of really hard around one level, and then suddenly, boom, it just goes to the upside. You know, 4, 5, 7 points in half a second, and then comes back and start grinding again, going to the upside, and then goes to this level or to another level, another weak, poor level, and then trade starts to have hard times there, and then just another burst to the upside. That's the kind of, if I would call it like a more standard short covering process. That would be short covering. I'm not calling. I'm calling short covering mode the fact that the market is removing this short inventory here from this level, from this range. These shorts here are being here. There are still, I believe there are still some shorts there are still many shorts in this market. Either that day, that sudden movements to the upside usually marks the end of the short covering, because that's when the shorts throw the towel. You know, finally there is capitulation of the shorts, and the market, they just give up their positions. They cannot see they cannot withstand the market going against their position, and the pain is so much that they just start to cover at huge losses. All right. Now this market, let me do something here. What's happening with gold? I want to check something here. When volatility, another thing is when volatility is low or less than 20 or what it is now, I start to change my chart. I guess it could be a good time to change my charts as well. So instead of select instrument, I'm going to open this. I'm going to select M3, 24, 25. I should have done this earlier. Let's see how much time it takes to I got my charts are frozen now. What I do is I go back to one tick. Also again following the advice of Jim here. My God, this chart is not. This is frozen now. God. Oh my God. Should I wait or should I let it go? Okay, right there. It has taken too much time, man. And still it's not loading. I go to one ticks to have a visualization of this market, because the one tick right now I have it in two ticks. I guess I can show you here. Settings. If I go one tick here, come on, please. Okay, you can see the range. The range this is a wide range. Right? When volatility is low, I go back to one tick. I consider elongated market good. The excess here. I guess it would have been better if I could have seen this better. If I had one tick, we have a good. My God, look at this. It was close. This gap was close, man. Gosh. Alright. 61.25 on you. Yeah, this is good. Oh, okay. If I use two ticks, this is not close because this rounded up to 61 and this is rounded up to well, 61 as well. Okay. 28. No, it's taking too much time. I'm not the other chart that I open is just frozen. It's freeze. And now my charts are frozen. God damn it. I can do nothing here. Alright. Notice how this market will have a spike to the upside, a gap to the upside, and the market is opening it is going to open inside a spike. I have good, I mean, these kind of days are usually the ones that are hard for me, because the market opening inside spike has not rejected higher prices, but it shows some acceptance. Plus the gap there, with the gap, and wow, such a coincidence, right? Closing, taking half back, it would be also closing. It would be closing the gap, about closing the gap. All right. Remember, I try to remain as neutral as possible. I got my observations here. Man, everything sounds at the same time. market is open. We have a gap. We have a gap to the upside. We have a spike to the upside. Overnight inventory is 100% long. Look at that low, man. Look at that low. What can you say? What can you say about this market here? It was where it was bought from. Overnight hardback, which is one tick from closing the gap. It has failed to close the gap for one tick. That usually is an upside trade. We have a spike here. Market it's clear that the market is not paying attention to the overnight inventory. We have a 4100 right there. Also the non-excess high up here. If the market doesn't do a counter-reaction to overnight inventory, that's a strong market to the upside. Notice how counter-action here to overnight inventory is also will also put the market back inside yesterday's range. I'm looking at some news. This is the spike, the base of the spike right here. You have a nice spike. Oh, actually the market opened below the spike. Huh. I was wrong, it didn't open inside, but it opened below the spike. Huh. Obvious references on the upper side are overnight high and 4100. Non-excess high here. I guess, what can I do here? Okay, I'm going to make this visible. I'm going to remove. Wow, I got too much. Why I have too much here? I got a lot of data here. I guess that's why my charts are taking too much time a lot. Yeah. It's frozen again. Okay, how do we do something else here? Wow, I have 100 here. Why I have 100 here? Yeah, that's much better. And now I have a mirror here. I don't like when that happens. My chat are too slow. What I'm going to do, I'm going to close it. I'm going to open again. It cannot be like that. Let's see if opening again speed up the processing. Oh, come on. What? Select an instrument. Much better. No, there's problem. It seems like I am having problems with my data provider here. It's just taking too much time. Something's going on with the rhythmic. I did not update my Thinkorswim. Look where the gap, where the old contract. This is what is this M? It is M? No, it's H, right? H3. Notice where the gap is in the old contract. The gap is not there. The gap is way up higher. My charts are not loading yet. It's just taking too much time, and that's dangerous. I mean, to trade with something that is not working, it is quite risky. So let's play Saddle. Saddle is 4080. Last is 4083. So the last, this high would be 330 high. What else do we have here? Halfback. Where is this halfback? Where are you? Oh, here you are. Let me move this here. The market is heading towards the 4100. $360 low. $49 days, 1 point from 4100. Usually those levels attract a lot of trading. If there's any problem, usually that's the level where any problems, where you can have problems. My chart is not loading. Can you see? I'm going to close it again. And opening again. Okay, right there. Ooh, you see that? Híjole. Where's my lever? Where's my yellow line now? I have a lot of problems with this ridiculous. What the heck? Enter symbol? What the heck? Where's my price level here? I cannot see my price level. Gosh, it's one problem after another. I'm closer again. Okay. I see the market has taken the 4100 here. It's having some selling from that level. Alright. Again. Let's try it again. Okay, oh right there, finally. Okay. The 4100 has been taken. We have a breakout of the weekly. The high of the month is right there as well. The low is not particularly a good one. When the market fails to close the gap by one tick or takes a reference but one tick, usually comes back to like a stick data. Not saying it's going to come back, but the odds are that it's going to come back to repair this low here. We have excess here. You have a nice breakout of the. There is something wrong here. What the heck is going on? Oh, this is one tick. This is a one tick chart here. What is my volatility index? I'm going to use my phone to check that. $18.84. I was 19. This is the base of the spike. The market opened below the spike, but opened with a gap, with an upside gap. The guidelines are go with the gap. That is not fill quickly. The reason why I have my charts in one tick or two ticks is to try to maintain a perspective. You know, the same approach, right? Because when volatility is lower, ranges are shorter as well. You know? When volatility increases and I cut my charts to two ticks, or I set my charts to two ticks, what I have is the same kind of range. So I am familiar, my brain is familiar with this range, for example, this extension, the size, this one relative to this one, for example, right? In one chart, can you see, for example, with this volatility here, also, yeah, my screen cannot fit the whole range there. That's another thing. But mainly to be familiar with the distance that the market can travel. So the next one is the 4110 up there. Monitor for continuation, we see the market taking that high out. The low is not good. Very questionable low though. There's a lot of trading around the 4100 here. Remember when we were talking about what direction the pressure is in this market is? That's what you want to get, right? Now value is higher here. You got value here yesterday, and now is for value to be overlapping to higher, the market needs kind of like a big break here. Coming from here all the way down to here would be a big break. Now I'm going to start. Just now I can see the market. How much time has passed? Like 20 minutes before I can have my charts. These are the charts with 2 ticks. I got my histograms in 2 ticks. Now I can see the lack of access here, no access here, no taper on the lower side, weaker level here. Not good here, not good here as well. This may look better in the 1 tick if I use the 1 tick, but still. Next reference on the upper side. Remember, right now the market is having an upside breakout in the monthly, and my bad, in the weekly time frame. Check this out. Market is, how's the market? Yeah, market has closed the gap here. Oh yeah, this gap has been closed. The ultimate destination trade could be 41.33. Okay, I got this level from my observation, from my homework. I bet I'm quite sure that not too many people have this one, because people just see oh, market is going higher, just a very short time frame. The relevance is that you are having these movements is we are having an upside breakout here, breakout of the weekly range. Go with the break. Go with the breakout. That was a trade, right? We said we talk about that in the morning. Go with break and wait a break that fails. It was an upside breakout. It has not failed. Was bought from, couple ticks from closing the gap. 1, 2 ticks from closing the gap. One tick from closing the gap. This is a very weak level here. Regardless, this gives me an indication who is doing the trade, who is my competence here, who I am competing against. $40.30, man, those $40.30 are quite cheap. But notice how far that $40.30 is. It's way up here. That could be the destination of the daily, of the trading session, could be the destination up here. It's a really long distance. Even if I've used a 2 tick chart, it's a really long distance. When the thing is, when volatility is lower, this distance, the distance traveled to the upside is you can see there's a long distance here. Versus using the 2 ticks, 40, how much was that level? 41.32, right? 41.32. Let's mark it here. That one. I want to mark this as 41. 41.32, right there. Now notice the distance here and the distance here. And from here to here versus from here, this is closer, but the volatility is lower. Lower volatility also, the ranges are lower as well, are smaller ranges. 20% could be maybe like 2.5% of the index. 2.5%, how much it is? Right now I'm 4100. 100 points the maximum versus 2. 150. That's 50% bigger or 50% smaller. Not like that's 30%, right? Yeah, 30% smaller. No way. Look where the market has stopped here. Half back of this day. Huh. 4100 basically. If you have any questions in the comments, please, I would love to hear. Am I missing something here? Okay, is this a week? What the heck? What is Notice, notice how this mark is being sold from half back of this day. It is far, far back, right? It's more than a month, almost a month behind, but it's still selling happening from this level from half back. has been taken. Oh my god, look at this. Look at this, man. Look at the volume we have. Oh gosh. I almost missed this. God, look at this volume here. How much is this? This is freaking dangerous. This upside movement is... what? God, what the heck? How much is 20% lower than yesterday? Gosh. This is not good, huh? Don't ever think... nah. How much is that? 27% lower than yesterday. Man, the risk here on the upper side is huge. Huge risk here on the upper side. The loans are taking incredible high risk here. It doesn't mean that the market is not going to go higher. No, but it means the risk is incredible high here. Huge, difference between yesterday and today. If you are alone out there, be very careful. Be very careful. But still, this market is going to the upside, because this low has not been market buying from overnight hardback from yesterday's high. Basically, the odds the market coming back to check this one are high. But these options on the lower side are very expensive, man. Breakout failure would be the market coming below. What is the weekly monthly high? What's my other chart? 4082. Where's March high? March high is this one, isn't it? Yeah, this one is March high. This is another weekly monthly high. Many times as well I have bad days because I get this volume very low, for example, right? Which is an indication that the movement that we are having right now to the upside is extremely risky. There's a huge movement to the upside, but volume is not behind the movement. There's not nothing backing up the upside movement. And what I did was trying to upfront the market. Okay, the market the market is going to break, right? And I try to step ahead. What I did is actually step in front of the train. Things I do, right? Well, remember, if we have a distribution curve here that this is a movement, right? Something like that. I try to be here, right? Here or here. When I didn't have enough patience to wait, to wait or for the market to show its hand, and try to be here in this area. This is a laggard, innovators, early adopters, early majority here, and late majority up here. This is a distribution curve also, no? But this is, in this case, now another thing here is, this is a graphic that shows the participants of the market. Now, in the current market, this value area here is the relevance of the value area here is that 70% of the trade that happened during the session has happened here. That's why it's important. That's why the relevance is important. That's why value area are important, because 70% of trade happens in this around those in that area. And if I am doing something here or doing something up here, I will be far away from a standard deviation. I can be either, if remember the distribution curve that we had before, I can either be an early adapter or a laggard. And I don't have the capital to be here. I'm more likely going to be this one, right? Because this to be here, to be an innovator or early adopter, you need to have staying power. The weakness in this market is, the weakness of the rallies is there's a tremendous amount of risk here in this market. And what would happen, for example, if I am short now? Okay, volume is low, and this low is weak. Have another one here that's no good here. Only plenty of levels to use as a reference in the low side to say that this movement is not good, right? But that's what the market is doing, right? That's what the market is doing. The market doesn't care if there's weakness in the lower side. The market, those are real orders coming into the market. It is going to last. It's going to collapse. Nobody tells. There is not a bell that rings. That that rings when this upside movement is going to end. There's nothing. Nothing tells us when this is over. And there is sometimes actually that we think, it makes us think that, oh my God, this movement, this movement, this market is going higher forever, and that's when finally we may cave and go in, right? We don't see an end of this market. This market keeps going higher and higher. It is higher here, and then the next period is higher, and the other one is higher, and then, oh my God, I'm missing all this action, right? And when we enter, we are entering right here in this section. Right now, this market could be very well, maybe in this area here. Late majority to laggards here, because there's a tremendous amount of risk here. Tremendous amount of risk. And patience also is very important. We need to have patience. That's something hard to get. The first reference in the upper side has been taken, which was the 4100. Upside continuation, we see the weekly, monthly, the non-adjusted contract being taken out, followed by the weekly high, with the current contract high, which happens to be also non-excess high here, non-excess high here, poor high here, and another poor high here. What do we have next week? Next week. Let's see, non-farm payrolls. Okay. We have seen some numbers. Inflation is cooling down according to CPE. Consumer confidence is getting lower. Jobless claims are getting higher. So this is the right direction. This is what the Fed is trying to achieve. What concerns me, what the message I have on this market is the market has opened below the spike, has not closed the gap though, that was a fair straight here, not closing the gap, but there's still a lot of long inventory here in the overnight. We got a gap, we got a minuscule gap here, but it was a really small gap that, small gaps are really, easy to close than bigger gaps like the one we have a couple days ago, for example, and even like the one we had yesterday. We have a gap yesterday, huge gap here, and the market just closed. This gigantic gap was closed, and look at what happened today. Like this small one was not closed. What's the message? It's being delivered by the market. Such a small gaps not closed. Having a lot of long inventory here that can be taken out really quick, right? I can actually feel some break here. There's a message. The market is telling us something here, but that this market has some strength, at least in short term strength here in the market, but having this kind of volume, I don't want to do nothing. I have nothing to do with this market. Now, if you get a breakout, go with breakout, right? You had a breakout here, but the monthly, this is a weekly breakout here. We got a weekly breakout. Go with the breakout and fade the breakout that fails. All right. If there's any question, if there's no questions here, I guess I'm going to call it a day. wish you guys a good rest of the day. Stay safe out there. Bye bye. I don't have a market update on Fridays. Alright. See you guys. Have a good weekend. Bye bye.